In today's video, I'm going to show you exactly how you could have caused a 4.86 risk to reward literally on market open. Before the market even fully opened for Asia session, you could have entered a trade and been done, but before the start of Asia session. And this, it just goes to show how good this strategy is, because once you know the direction of the market, you know what to look for in the market. So have a look. On gold, as you can see, on Friday night, we had a massive impulsive push up. Coming in to Asia, before the market even opened, I knew we were going to sell off. Why? Because we have all this liquidity to fill out and price was bearish internally. What did we see? There was internal break of structure made on the 15-minute time frame, late New York session. Coming into the market opened and it had a big gap. Price ripped to the gap, then it pulled back up, and then price swept the high. Price swept out this liquidity in the market. It then swept out protected high. Price gave us a rejection, and off the rejection, you could have entered the markets with a 400-point stop loss, which is 4 pips to me, targeting the lows over here, right? Because we target body lows. Now, why this trade? Because it's simple market structure and liquidity. Price broke structure. Then you got to ask yourself, what is the high that has made this structural break? This is the high that made this break. Have a look. Just grab your path tool. High, low, new high, new low. This fits in our trading strategy perfectly. Remember, we're looking for something like this, which is a break of structure. Price comes up, price opens, it makes some liquidity in the market, all the early sellers in the market. Price then comes back up, sweeps them all out of the charts and out of the markets. We then get our rejection of our actual protected high, which is what we're looking for. Once we get the rejection, as we have over here, you can see this rejection candle, the white one right over here. We enter our sell position, stop loss at the high, take profit at the low. Now, why stop loss placement up here? Because we give it some breathing room. Now, if price was to come up and hit our stop loss, then we now know that buys are on the cards and we have all these areas to target. But since this is the last high and it's a protected high, we expect price to respect this high and make this a weak low. Why is this weak? Because remember, any low that fails to make a high is weak. Any high that fails to make a low is weak. This was protected because it caused a structural break. Price comes up, sweeps out the liquidity, sweeps the high, get your rejection candle, enter the trade. You would have entered at 6:45, and by 8 o'clock, an hour and 15 minutes, you were done. You can literally call it a week right here and start the month off strong. If you have any questions, please let me know. We do have a free Discord where we teach educational advice. So if you want to learn about what we do and how we trade, then you can join that. It's completely free. Check out that Instagram. This is exactly how you could have been finished trading for the week straight off market open.